What's up, guys? What's going on? Welcome back to this section based on our Kingsfx maskman strategy. So next thing we are going to be looking at after our discount and premium is order block. All right, order block is very simple. Order block is interesting. So let's dive into the chart and see how we can actually make use of this order block. So if I go to the chart right now, and there's so many ways to draw an order block. Okay, there's so many ways to mark it out, but in this video, okay, in this particular section, I'm going to be sharing with you the one that we actually use. Okay, the one that we need. You can check other ones out and maybe modify the strategy yourself, but this is exactly what works for me, and that's what I'm sharing with you guys. Okay, so first, if the price is actually, if you want to mark an order block, okay, for a bullish market, okay, an order block for a bullish market, there must be a downtrending market already. Okay, you have something like this, then maybe from here you have something like this. Okay, then maybe after that there's a bullish market, a bullish candlestick right here. So when you have this thing here, okay, when you have this thing here, you are marking out the opening and the closing of the opposite candle. Okay, you know that we're looking at bullish order block here. Okay, bullish order block. So we are marking the opposite, and the opposite of bullish is bearish, right? So we are looking at the last opposite candlestick. So we are looking at the last opposite candlestick, which is the last bearish candle before that bullish candle. Okay, so if you look at this particular candle right here, this is the last bearish candle before this bullish candle. All right, so you are marking at the high of that candle. Sorry, that is the opening and the closing of the candle. Okay, so if you look from here, this is the opening of this candle right here, and below is the closing of this candle. So this point right here becomes our order block zone this is for a bullish order block. This is a bullish order block. Okay, as simple as that. Just mark out the opening and the closing of the opposite candle. For this one is a bullish order block, so we are marking the opening and the closing of the last bearish candle before that bullish move towards the upward side. The reverse is the case in a downtrending market. Okay, that downtrending market, that is a bearish market. Okay, and we are looking for bearish order block. What we need is a bullish candle. You want a bullish candle towards the upward side, maybe this way. All right, so at a point there's definitely going to be a bearish candle, right? So when you have a bearish candle this way, now you start looking for your order block. So the order block is still the opposite candle, the last opposite candle. Okay, so this is a bearish we are looking for the bearish order block, right? So we want to see the last bullish candle before that bearish move, which is this one right here. So we mark out the closing and we mark out the opening of that particular candlestick. So this is the opening. So what we need to do is to mark here and extend it this way. So this becomes our bullish order block. This is our bullish order block, guys. So this is as simple as ABC. So you look for a swing. Okay, if it's a swing low, you are looking for, in a swing low you are looking for bullish order block, which is here. In a swing high you are looking for bearish order block, which is here. So if the price is pushing up this way, let's say for an uptrend, okay, let me do this. For an uptrend, the price is pushing up maybe this way. You have this, you have this, and you have this. So at this zone, the price is about to push again. So what you are looking for is this particular bearish order block at this swing low. You can see this is a swing low. So you're also looking for this also here. So what you want to see again, right here, Okay, the price drops from here, drop again, and you can see the price right here. So in this zone you are looking for bullish order block. So if the price did this, closes up, you are looking for the low and the high, that is the opening and the closing of that candle. So this will be your order block. Again, in an uptrending market, this is an uptrending market, so in an uptrending market you are looking for bullish order block, and this is exactly how to mark out your order block. The last opposite candle before this bullish move, the last opposite candle before the bullish move. If you are having another retracement from that point, okay, if you're having another retracement from this point here, let's say the price is going to be dropping again, and we are seeing this and this, then after that you might have this and this. So now where is our order block? It's as simple as ABC. You look at the last bearish candle, 1 2 3. This is the last bearish candle before this bullish move, right? You are going to be marking out the opening and the closing, and this becomes our order block again. So can you see how we easily mark out our order block? This is the first order block, first bullish order block, second bullish order block, third bullish order block. All right, are we good? So this is exactly how to mark our order block. So the reverse is the case in a downtrending market. Okay, so if the price is also dropping towards the downside, okay, price is dropping towards the downside, and you have this becomes our first bullish order block. So if the price drops here this way and started to push up a bit, we are looking for our bearish order block here again. Then if the price also drops again and push up, we are also looking for another bearish order block. So let's say that the price is also retracing. After this, the price started to retrace a bit towards the direction. So at this point we are looking for our bearish order block, right? So if this price drops this way, sorry, if the price drops with a bearish candle closing below that opposite candle, so here now we are looking for our order block at that point. So we look for the last opposite candle, which is this bullish candle here. So here to here is our second order block after this first one. So if the price also retraces back again, okay, from here decided to push back a bit, so at this point you now have a bearish candle drop this way. You are not marking order block yet. You must wait for the last bearish candle to be engulfed. Okay, it can be engulfed just with one candle or three candles or two candles. Just once the price breaks and closes below that candle, that's the point you start marking your order block. Okay, so now here you will look for the last opposite candle, which is the last bullish candle, which is this one. So we mark our third order block at this zone, the high, that is the closing and the opening of this candle. So this becomes our third order block. Are we good? So this is our order block 1, bearish order block 1, bearish order block 2, and bearish order block 3. This is our bullish order block 1, bullish order block 2, bullish order block 3. All right, so this is exactly how to mark our order block. Now the question is, do we consider the wick or the body? Do we consider the wick or the body? So for this strategy, I want you to follow whatever I'm going to explain right here. So if the body of the candlestick is too, let me start with this. If the body of the candlestick is small, okay, let's say we have this bullish order block. Let's say we have this bullish order block, sorry. Price sold, and we have the next candle this way. Okay, and now if you have wicks, okay, if there is wicks here, have a wick right here, and also maybe you don't have any wick here. So the question is, are we considering this wick or just the body? Now if you look at this candle, this is a very heady candlestick, right? So heady candle in the sense that the body, there is full body and small wick. Okay, you easily mark out you maintain marking out the opening and the closing of this candle. So this is the perfect place to mark this order block. Okay, this is the kind of order block we want. Anyways, this is the kind of order block that we prefer using. Now there is a situation, there might be a situation where you have something like this, the price dropping this way. Okay, and at this point you now have maybe you might have wicks like this from here to here. Might also have something like this. Now where do you mark this your order block? For this order block, I want you to focus on the high and the low of this wick. So this is going to be your order block. After a bullish candle, you know, once you have this bullish candle above this way, this becomes our order block for this one. Okay, so the next order block I want you to also focus on, this is our order block now. So you are not just going to mark the body, but you are going to include the wick. Okay, so for this strategy, so the next one is, what if we have something like this? If the price is pushing down this way, let's say you have something like this. Okay, then you now have bullish candles this way, this way, this way. So now where is our order block? If you mark, remember something, I want you to pay close attention. If you mark this from here to here, you can see that this order block is too wide. You don't want this. So you have a very impulsive momentum candlestick. Okay, momentum candlestick this way, you have to look for the middle of that candle. And if you look here, this is the middle of this candle here. This is the middle of this candle. So you look for the middle. That's where you are going to mark your order block at the discount zone, becomes your order block zone. So around here, anywhere around here is your order block. So you are not considering this high or the closing or the opening right here. You are considering this low in a bearish market. I don't know whether you are getting this. So these are different ways you can mark out your order block. This is the most interesting one we are looking for. This also if you have indecision candles or candles around with wicks, okay, with that is candles with wicks and small body, okay, you are going to consider both the wick and the body of the candle. Okay, because you are considering the wick, sorry, that is the high and the low of the candle. But if you have this healthy candlestick, you are just considering the body. They have this momentum candlestick, you consider the equilibrium point, which is the 50% of the point. The discount is what you are looking for. In a bullish market, you are looking for the premium. All right, so this is exactly how to mark your order block. I hope you enjoyed this. I hope this is going to be helpful, and I will see you guys in the next one. Bye for now, guys. Enjoy.